Well, we have to brace for more volatility. We have to brace for, higher inflation expectations, and as a consequence, a longer period of higher yields in the United States, and therefore a higher for longer interest rate scenario in the markets like Hong Kong, which have a dollar peg, and even in other parts of Asia. It implies that this period of volatility that we're seeing is likely to continue for longer. Um, uh, Eventually, President Trump might want to get into a trade deal, particularly with Canada and Mexico. Um, China is a slightly different story. But to get to a favorable situation for a deal, he has to hunker down and continue with these tariffs just to show that he has ammunition up his sleeve. In the meantime, there could be retaliatory tariffs from these countries, and clearly that's not good news. So it's in the near term not really looking good at all.
What do you make of the currency reaction, particularly CNH? Of course, no trade in CNY given the holiday, and that's where the issue really is with regards to sort of squeeze on liquidity, and also the PBOC doesn't have their onshore fixings right now, so it's sort of hard to test the temperature there. But 0.4% offshore right now, 735 thereabouts, changing hands with the US dollar right now. I mean, how much do you anticipate this is going to be used as a shock absorber in the face of these tariffs? Because right now, as you say, to your point, I mean, we're only dealing with 10%. This could be up for negotiation if China does satisfy Trump as far as the fentanyl trade is about, because that's what really this is fundamentally over. But also, it seems that China perhaps is a bit wary to devalue the currency at this stage, because we haven't even talked about maybe the other tariffs that are very much what the market seems to think is a failure of the phase one deal over the purchasing agreements and basically fundamental changes and structural changes to the Chinese economy.
Usually, when faced with higher tariffs, the usual reaction on the part of any country is to devalue the currency so that a part of the increased cost gets absorbed by the cheaper currency. But in this present case, and as we have seen over the past few months, China has been reluctant to devalue the currency because of the concern about capital flights. I don't really think that that particular policy direction on the part of Chinese authorities would change. So you would certainly have dollars strengthening across all currencies, across the developed and emerging market currencies, and that would have an impact on the Asian currencies in general. But if we're looking for conscious decisions, policy decisions on the part of Asian countries, including China, to devalue the currencies, I don't think that's likely to come anytime soon.